Yes, people, how are you all doing? Hope we're all well. Welcome back to another episode of Sniper Sundays. This is a series where I run through all of my trades placed inside the VIP group, and we create a ongoing track record, whether the trade wins, loses, or draws, and go through the full strategy breakdown following each trade. So this video is going to be a little different. I've actually put my webcam on this time. I'm going to start doing a bit more webcam videos. I feel like it's just better for the channel, really, isn't it? Rather than just the reason I didn't before is because I didn't want to block the top corner, but minimize it a little bit. Do you know what I mean? It's not that big of a deal. I've been on holiday in Vietnam for the past 3 weeks. If you don't know, I'm currently based out in Thailand myself, but I've took 3 weeks out to Vietnam, so it meant that I was away from my desk, which is why I haven't recorded any Sniper Sundays. Did a few lives on and off, but it's just not the same when you're only on a laptop and you're not with your computer. So we're going to be continuing the Sniper Sundays from here on. What I want to do is I want to basically align them a bit more with the weekly and monthly track records that I post, because I've realised I'm saying, here's what we've made for the month, here's what we've made for the week, and then I do the Sniper Sundays and it's all off because the week was 25th to the 2nd and we took a trade on the 1st kind of thing. So I'm trying to just synchronize everything a little bit more. So if I do tweak stuff, I do change stuff here and there, it's usually for the better. So yeah, without further ado, let's get into it. So in this video, I'm going to cover the 3 weeks before last week, which will mean that it finishes off the month. And then next video is going to start from the 1st of the month. So then the track record and the monthly is kind of aligned that way. But there's also a lot to cover, so it's kind of for the best. So since episode 13, let's run through all the trades that we've placed. So we had a pound US dollar stop loss hit. Before we get into this, let me just say that I've got a 14-month live track record of the VIP trade. So of the actual signal group trades I post, we've got a 14-month live track record, about 165 trades in total, and it shows that I actually have a win rate of about 38%, which to a lot of beginners will look at that and think, oh my god, 38%, I want 100% win rate. But that's just not how trading works. It also shows that my average RR is 2.55 over the space of 14 months. So you can do the maths based on if you win 62 trades out of 100 and you make 2.55% per win, but then you lose 62 trades out of those 100 and lose 1% of those. You can do the maths, okay? So we have a profitable edge on the markets using this system, but that's kind of an explanation of why I lose more than I win. It's because when I win more than double the amount of when I lose, okay? So I am going to show all the losses, all the break-evens, all the wins. I'm not just cherry-picking, oh my god, here's this 1 to 15 trade that I took. I'm showing you everything. Pure, transparent breakdown, okay? So first up is a pound US dollar stop loss. This was on the 5-minute time frame on the 15th of May, which I've got loaded up here. Basically, what we had here is we analyze the Asian range, okay? So I trade London. And what I do is I analyse what happened within the Asian range. So what we saw within the Asian range, which I'll highlight for us here, just like that. And now I'll get rid of this, is we saw that after the Asian range finished, price just obliterated the highs, came back and made a lower low, and then started pushing higher again, okay? So we had this taken out. We saw that price failed to take that Asian low, but instead started pushing higher, making higher highs and higher lows, just like so. So, following my strategy, we had 3 instances of EMA support, and our overall direction here is bullish. Okay, so we've got the bullish sentiment, we've got higher highs and higher lows being created, we've got EMA support 1, 2, 3 times. So that is plenty of confluence for us right now to assume that price is going to continue making these higher highs and higher lows, just like that. So the first trade that we placed was from this low to this high. We formed our fib levels. When price comes back to a fib level, what we look for is a rejection candlestick in between our key fib levels, which just make them a bit more visible there, which are the 61.8 and 78.6. I'm going to get rid of the 50 from there to make it less confusing. But basically, what we look for is when price has a clear direction and it makes a higher high and a higher low, we look for price to reject and take it from one of these fib levels up to its previous high. So unfortunately, when we tried it here, we had our rejection, which was this hammer candle, and then we got an entry there, target the previous high, stop loss just beneath that low. Unfortunately, this one was a stop loss and we took minus 1%, as we can account for there. But the logic of the strategy is that you basically have so many confluences. You have an overall higher time frame bias saying that price is going to go in this direction, and what you're looking to do is align 5 to 7 different confluences in one to find a level that you can buy the market at and take profit at, and then analyze your risk management where you would get out in a profitable, calculated event where you win a lot more when you win than you lose when you lose, and the sum of all the wins minus the sum of the losses provides you with an edge on the markets. Don't just take my word for it. Look at all my other videos, look at my track records, look at my third-party verified track records on my FX book, DarwinX, FX Blue, and you'll see it all for yourself. Okay, so first trade, we took a stop loss. If you're struggling with your psychology in trading with taking stop losses, it's perfectly normal, it's perfectly human. If anything, it just makes you just like everyone else, like a living, breathing human being. It's the hardest part in trading. What I would recommend is for you to get all the data on your trading and on your strategy. Every single trade that you take that is valid to your strategy, note that down in an Excel, Notion, whatever works best for you. Okay, I like Excel, but I know I'm a bit old nowadays. And just get the data on what is your win rate. For me, it's 38%. So I know that every trade that I take, as long as it's valid, only has a 38% chance that it wins. And I am completely comfortable with that. Taking a stop loss for me doesn't mean anything. Doesn't mean anything these days, because I've got the data and the law of averages within myself to know that when I'm trading, each trade that I take has a sum of probability in the outcome. It might win, it might lose in that individual event, but overall, long term, I know my data. Okay, so this one was a stop loss hit. So was the next one, pound US dollar hit. Let's look at that next trade. So if I scroll down in my VIP group, I can see the next trade was, bear with me, 20th of May at about 10 a.m. So let's clear that. And we go 20th of May at about 10 a.m. Just like so. Okay, and this was on the 5-minute time frame again. Okay, so let's do our usual. Let's inspect the Asian session. Okay, so we had this Asian session here. Price broke through the high. It then took out some liquidity below. What we were looking to do at about 10 a.m. here was, again, we were looking at price making higher highs and higher lows. It broke above the Asian session. We had support from this EMA. We looked to catch price at a level here to buy higher, just like that. What happened? Let's remove this. Is we had from this low to this high up here. We had our fib levels that we looked for. Price was making higher highs, higher lows. We've got bullish bias based on the Asian session. And price came down here. We had this doji candle, which gave us our confirmation that it was rejecting this level. Took buys at the 71%, stops just beneath the low, TP at the high. And unfortunately, again, this was minus 1%. So let's add that to the record, minus 1% again, and move on to the next trade. Simple as that. Same setup over and over again. It's the exact same textbook strategy over and over again. And I'm not scared when this loses, and I don't celebrate when it wins. I purely just execute, none to it, win or loss, don't matter, okay? Law of averages over time. Next up, on the same day, so here's why I wasn't that phased when I had this set up, okay? On the very same day, 20th of May, I'll show you what I also had going on EU, okay? 20th of May on EU, okay? So what we also had at the very same time was a hedged position, okay? So if we look at the Asian session on EU, you can see higher highs and high lows, yep. Price broke the high, but then what we had, okay, let me just make sure I'm doing this exactly to where I was. So I was on the 2-minute time frame here. So let's go back 2 minute. And what we have is, this is where I defined a change of character, okay? So this is using a bit of a different strategy now. Still playing on the Asian range, but it's playing on when the London session reverses from the Asian range rather than continues, okay? So what we had here is price making higher highs and higher lows, but then we have a change of character in the London session following on shortly after from the London Open. On this change of character, we open a sell stop order, which is basically where if price instantly breaks through that level and then closes on a 2-minute candle, we look to sell immediately on the breakout. So we put our stop a couple ticks above the high, and for this I target a 2RR trade like that. So then price came up, change of character, sell stop order, and then immediately sold through and caught a nice 2% trade. So that was the Euro USD trade. Oh, my bad. That was the Euro USD trade there for 2%. And this was at the same time that I held the pound long. So within the group, let me slide this over. Let me show you, okay? So within the group, we said, look, short on EU and long on GU. This provides us with a hedge. If one wins and one loses, it's still a positive outcome. So I hope you see here, I was saying, if the pound goes long, we make this much. And if the euro goes short, we make this much. The pound going long and the euro going long should happen at the same time. The euro going down and the pound going down should happen at the same time. So we are kind of expecting one win and one loss from this, but 2 minus 1 is 1, and 2.4 minus 1 is 1.4. So we've created a hedge where it doesn't matter which one wins and which one loses, it's still a positive outcome, so long as they both go to TP and SL, which is exactly what happened. So although you saw a stop loss here, the overall outcome was that we actually made 1% from that collective hedged trade, okay? Hopefully that makes sense. A little bit complicated for beginners, but yeah, we're basically playing the odds against each other and creating a situation where even if it goes up or down, we're in a profitable situation, okay? Hopefully that makes sense. Next on the list, Euro US dollar stop loss, okay? Let's go through it. Let me move this over to my second tab. And next up we have US dollar long on the 23rd of May, 11:45. Let's see it. 23rd of May, 11:45. Let's go. Okay, so 2-minute time frame, I'm guessing? Yes, 2-minute time frame. So where we're at here, Asian session, which was bullish. It had a clear direction to it, which is important. Then it broke above again and had another break of structure higher. So that's kind of what I look for in the Asian session. If the Asian high breaks higher and then breaks higher again, this is when I I'm like, okay, let's look for it to go long. And then after that, we had a run of higher highs and higher lows, basically. So what I looked for is multiple EMA supports. So 1, 2. That now prepares us in a situation where we can say, okay, the EMA is acting as support. It's not a coincidence because it's not just hit it once, it's also hit it down here 1, 2, 3. I look for just at least 2 instances of EMA support so that I can say it's not a coincidence that it just bounced once. We found support from this EMA 3 times. So now we're coming up to this place here. And where I actually looked to go long was 11:45 is when it tagged in. I think it was from here to here. Okay, like I said, I'm not just going back and back testing and cherry picking where the trade should have been. I'm showing you where I actually placed the trade. So ignore me if I'm looking at my other screen. I'm seeing where I did actually place the trade. I could cherry pick it and be like, oh, this is a winning trade that you could have took, but it's not. I'm saying what I've actually done in the live markets. So from this low to this high, in this trend continuation, price came down. This is what I would class as my confirmation candle, because these 2 candles together form what we call candlestick duality, where 2 candles essentially act together as one. So you can imagine these 2 candles together, so the open, the high, the low, and the close. If you viewed that candle as one candlestick, you'd have a hammer candle if you combine those 2 into one. Another way to look at it is that this bullish candle basically took out most of that candle. So with the duality view, you would look at that as a wick. The same principle as this, where it came down and reversed. It just happened over 2 candles instead of 1. So at that point, I've got my confirmation, okay? So then we actually took price here. We waited for it to retrace back to that point and retest that point at the 78.6. Had our stops beneath the low and had our TP above the high. This was a little bit unlucky. Price swept all the lows and then just came back and would have hit the TP anyway. So the direction was kind of right. We did trend all the way up there, but a loss is a loss. Okay, whether it was by 1 tick or 100, it was a loss. So minus 1% for that trade. Next up, Euro USD again. I think this is the last trade on the list. Yep, Euro USD TP hit plus 3.44%. So this one, a little bit more recent. This one was tagged in on the 29th of May at about 11 a.m. So let's go and check that one out. 29th of May at about 11 a.m. Just like that. And this was on the 2-minute time frame again. Okay, cool. So if we inspect the Asian session, here it is, pretty consolidating Asian session. You'd usually like to see those get swept and we trade the A sweep like I showed you in that last winning trade. But here it didn't. Here we had a break of the high and then another break of that high. So now we're looking for longs for London today. So what we had, let price develop a little bit, and now we've got 1, 2, 3, 4, 5 instances of EMA support. After the second one, so after here, this is where we looked and we said plot from the low to the high, just like that. And we're looking for price to make higher highs and higher lows, higher highs, higher lows, just like this when it's trending bullish. Okay, from this wave that's had multiple instances of EMA support, and it doesn't have to fully touch the line, by the way, when you're looking at support. You can sort of imagine this line acting as like a magnet where it's repelling price, because this line isn't some magic voodoo witchcraft line that just repels price. It's the average price. So if something is increasing in price, you're saying that it's going to be worth more in the future than it is now. when's a good time to buy that? Well, surely at the average price, because if you're saying it's going to be worth more than average in the future and you buy it at the average price now, surely that's a good place to predict that it's going to rise. No? Okay, so that's a way to like physically understand what this line is. This is the average price. So when price is coming towards its average price, buyers are saying this is now worth a decent price, a fair price, and I think it's going to be worth more in the future. Comes back, okay, this is a fair price, it's going to be worth more in the future. So what we do here, when we have a couple instances of that buyer behavior happening, is we look for price to retrace, form some form of confirmation, which we had in the form of these two hammer candles, or pin bar candles you could call them, because the wick is pretty heavy there. And then we look to get him on this 78.6 level here. I'll just show you proof, the no bullshit. This is what we said at 10:52, 29:05, is we were looking for price to hit this 78.6 after we saw that pattern there. So that happened, and then we looked for price to hit this level. Stops just beneath the low, TP at the previous high. Just like that. TP would have been a little bit wider. Stop loss would have been a little bit wider. 3.44. I believe that is what we looked for, yeah. Something like that, okay. So we got tagged in there, and then price swiftly played out to the upside, and we managed to make 3.44%. Why is that not working? In about 20 minutes, something like that. So that brought us our 3.44% win to end off the run. And the sum of this Sniper Sundays episode, -2 + 2 is 0, -1 + 3.44 is about 2.44% made within this episode, which puts our running total at 31, if I go back up. 2.44% from this episode, which puts our running total of Sniper Sundays up to 31.88%, okay, of all time. Since we started Sniper Sundays, that is, okay. So, hopefully you can see there, in the past 3 weeks, which I've covered, I've only had 5 trades in 3 weeks, which is pretty conservative. A lot of people think you need to trade 5 times a day, and they'll go join someone's signal group that said they put out 10 to 20 trades a day. That's not proper trading, okay? 5 trades within 3 weeks. Pretty high volume for me, to be honest. That's probably more than my average, to be honest. And it's still relatively not a lot. And of those 5 trades, we had 3 losses and 2 wins. But you can see that the 2 wins made way more than the 1% that was lost. So over this past 3 weeks, I've only had a 40% win rate. Yeah, 2 out of 5. 40% win rate. But I've still made profit, okay? So that's the reality of trading. It varies strategy to strategy, okay? If you're scalping, you're going to make a very high win rate, but you're only going to make like 0.2, 0.3% per win. Whereas the way that I'm trading here with this strategy, you're making like 2.5, 3.5% when you win, and you only lose 1% when you lose, okay? So hopefully you've enjoyed this video. Hopefully it's been very educational. This is a combination of my trend continuation strategy in the London session and also the Asian sweep in the London session as well. So we're either looking for a reversal during London or we're looking for London to continue. So I can play it either way. Sometimes both at the same time to create a calculated hedge, as you saw in this video. So yeah, thanks so much for staying around for this long. Do drop a comment on any videos you want to see me make or any suggestions or anything that you want me to cover. And until then, I'll see you next time. There is going to be a video out very shortly because I'm aware that I've not actually covered this week's trades. I've only covered them to the end of May because like I said, I kind of wanted to sync up the track record measurement a little bit rather than posting 2 different figures. So that's why. So be on the lookout for the next video very shortly and do let me know what else you want to see. Make sure to subscribe and I'll see you next video.